The stock market is on the brink of a pivotal moment, with investors eagerly anticipating a potential game-changer, a rate cut from the Federal Reserve. But here's where it gets intriguing. Despite the market's recent surge to record highs, stock futures remained surprisingly calm in overnight trading Thursday. Why? Because investors are parsing through a mix of signals, from weakening job numbers to inflation data, all pointing toward a likely interest rate reduction next week. Let's break it down. On Thursday, the Dow Jones Industrial Average soared over 600 points, closing above 46,000 for the first time ever. The S&P 500 and Nasdaq Composite also hit record levels, with gains of 0.9% and 0.7% respectively. And this is the part most people miss. While the Consumer Price Index, CPI, for August showed a slightly hotter than expected monthly increase of 0.4%. Its 12-month rise of 2.9% aligned with forecasts. Yet the real headline grabber was the unexpected surge in weekly jobless claims, which jumped to their highest level since October 2021. This shift in focus from inflation to employment has investors convinced the Fed will act swiftly. Seema Shah, chief global strategist at Principal Asset Management, summed it up. Today's CPI report has been overshadowed by the jobless claims data. While inflation is a tad hotter than expected, it won't deter the Fed from cutting rates next week. If anything, the rise in jobless claims adds urgency to their decision, with Fed Chair Jerome Powell likely signaling more cuts on the horizon. Futures markets are nearly certain the Fed will reduce rates by 0.25 percentage point at its September 17 meeting, according to the CME FedWatch tool. Meanwhile, all three major averages are up about 1.6% for the week, with the S&P 500 on track for its strongest weekly performance since early August. The Nasdaq is poised for its second consecutive winning week, while the Dow aims to end a 2-week losing streak. But here's the controversial part. Is the market's optimism justified, or are investors underestimating potential risks? While a rate cut could fuel further gains, the unexpected jump in jobless claims raises questions about the economy's underlying health. Are we on the cusp of a soft landing, or is this a temporary reprieve before deeper challenges emerge? Shifting gears, after-hours trading saw some notable movers. Adobe's shares climbed nearly 3% after its fiscal third-quarter results beat expectations, while RH's stock dropped 6% following a revenue miss. Supermicro Computer surged over 4% after announcing volume shipments of its NVIDIA Blackwell Ultra solutions. As the week draws to a close, the market's momentum is undeniable. But as we celebrate these gains, it's worth asking, what does this mean for the average investor? Are we in a sustainable rally, or is this a fleeting moment of optimism? Share your thoughts in the comments. We'd love to hear your take on where the market is headed next.